We're talking about Europe with Jeff Davis, Chief Investment Officer at Lee Munder Capital. Jeff, we were speaking just a few moments ago about the coordinated move between the ECB and other central banks yesterday to provide what appears to be unlimited dollar liquidity to try and tame what seems to be a new credit crisis, or perhaps the newest phase of a longer-running credit crisis. Is this going to draw a floor, or at least put a floor in your mind, under the euro? Under perhaps European spreads, under maybe even European stocks?
I think it'll last. It's a good Band-Aid, and I think it'll last for a short while. But, you know, it's basically a temporary measure that could restore confidence briefly while, you know, some of the more basic issues are sorted through.
Let's talk for a moment about the other big news in Europe while we wait for Trichet and more information really about what the ECB is doing. A headline just ran here, it won't surprise you, that UBS may have its credit ratings cut by Standard & Poor's. We heard something similar from Moody's yesterday. Does the scandal at UBS, a $2 billion loss on unauthorized trades, say anything about the European banking system, or do you think it's purely isolated to UBS?
Well, there are a lot of investors out there like me who, you know, just trying to get a grip around the size and the magnitude of the risk to European banks. And so in the middle of this, a scandal breaks in the middle of one of the most highly regarded companies, financial companies in the system. It's in Switzerland even. It's not even in the euro. And so we're a little worried about some of the data that's coming out, if that's the case. By the way, insiders in the industry are more shocked by this trading loss than even, I think, the general public, because we know how much scrutiny has come upon our books and banks' books in the wake of the financial scandal and in the wake of the Nick Leeson scandal way back at Barings. So it is shocking to us.
Do you think, Jeff, that changes investor sentiment towards the banks? I mean, they're already in for a pretty tough year so far. If you look at their relative performance, it's the worst performing sector on the S&P 500. Is that going to change the way that Americans look at the American banking system, as in it could happen here?
Sure. You know, the estimates on the losses of the European banks, the 90 largest, are somewhere between 80 and 260 billion euros, we think. And I thought I took those numbers at face value. Now let's take another look at those. For American banks, I think there's a lot more confidence. I think the risk exposures are fairly transparent, we believe, and there's more transparency in the system now than there has been, I think, in my career. But, you know, we're nervous, and that certainly is justifying, at least temporarily, the low multiples and the low valuations that are placed on American banks.
Jeff, Lee Munder holds a considerable share of some of these European banks. Have you reevaluated those holdings at all in light of the recent declines we've seen? I mean, the French banks, for example, have been hammered.
You know, absolutely, and you know, our strategy has been to be very patient here. Long term, the valuations on the banks are well below even a world in the future where banks are highly regulated and have boring businesses. The valuations at that point, when there's more certainty about the macro situation, is clear. So we think we can do well even if the banks' future is a little more boring in terms of the growth side. There's good value out there.
All right. Well, in that regard, we wish you luck, because it hasn't been coming for those share prices as of late. Jeff, very good to see you. We'd love to have you back soon here in the Inside Track. Jeff Davis, the Chief Investment Officer of Lee Munder Capital